Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me for this segment, we have Mark Marex, Director of Index Research and Development with Nasdaq Investment Intelligence, to discuss August monthly performance across the Nasdaq suite of indexes. And Mark, it's no surprise to see on our first chart here that performance was a little bit light across the board for August.
Yeah, Jill, we started off the month really well, continuing that broad rally from mid-June that saw a lot of these indexes on the Nasdaq side outperforming, and then we got that Jackson Hole summit with kind of a change in sentiment there. Folks kind of reevaluating, the interest rate and inflation path. So second and a half month was pretty rough, and as a result, we saw on our tracker of about 100 featured indexes that we follow, only about 21 of them were positive for the month. Average loss for the entire group was just over 3%. And on this first slide, you can see the kind of most heavily featured indexes in our suite on the left-hand side. Most of those were negative. The one exception was the Nasdaq Innovators Completion Cap. That managed to pull out a gain of almost 4% for the month, largely due to its exposure to kind of small cap biotech names. You can see anywhere from generally a loss of 2.5–3% for some of the other names here, like the mid cap Q50, as well as the Next Gen 100, to just over 5% loss for the Nasdaq 100. The worst performer on this list was actually the Phillips Gold Silver, down almost 10%. And then on the right-hand side, these are kind of our global benchmark indexes. So for kind of all the countries that we track, a loss of 3.7%. You could see that within the US, that broad trend that we noted earlier, small cap outperforming large cap, held true. And then internationally, developed really underperformed emerging. Emerging markets eked out a gain of almost 1%. And within developed, you had the Nasdaq Europe Index faring the worst, given all the pressures there, especially within the energy markets. Europe down 6.5% in the month of August.
Yeah, moving along to the Nordics and dividend income payers, another tough performance month in August as well.
Yeah, Nordics was broadly weak. Helsinki in Finland was the kind of standout there, down only 2%. Within the dividend and income suite on the right-hand side, you could see most of those didn't do too well either. That's been an area of relative strength for most of this year. Really only a kind of esoteric index, the Canadian Preferred Share Index, was the only one up, just under 1% there. Losses, anywhere from 3 to 7% for that suite. And then for green economy, top left, a tough month. That's been an area that had been outperforming to some extent earlier this year, especially for solar, but that gave back a lot of the gains, losing almost 10%, one of the worst performers this month.
And Mark, I thought it was interesting when we take a look at the next set of indexes here that the Nasdaq Dorsey Wright family outperformed noticeably on this particular chart. And those, if I remember correctly, are based off of momentum indicators.
Exactly. Yeah. So just about half of the indexes in that Dorsey Wright suite that we track ended up positive for the month. Really a disproportionate contribution to the overall kind of group of indexes that eked out gains in August. Really kind of proving that a factor approach does work well in a variety of different markets here. Of course, things like the Technical Leaders Index still fared pretty poorly, given the entire sector was kind of hammered in August. But you can see energy a standout, and some of those other areas like materials, even within small caps, you were able to eke out a gain of about 1%. And even in healthcare as well, a gain of just over 3%. So very encouraging to see it possible to still kind of do well in some of these areas using momentum as the kind of screening factor to select securities for outperformance. On the left-hand side, you could see fixed income there, top left, continuing a lot of the struggles that we've had most of the year, right? It's been really kind of historic, the level of losses that have been observed, not just in the US, but globally. For most of developed markets. Emerging markets, again, kind of the standout here, eked out some small gains in August. And then bottom left, within the options complex, not much safety to be found here. Really, the quarterly collar Nasdaq 100 index was the only one that was close to being flat for the month, down only about 0.5%.
And finally, Mark, you had mentioned at the top that the Innovators Completer Index outperformed because it has exposure to the small cap biotech. So it's no surprise to see on our final slide here that the Nasdaq Junior Biotech Index certainly outperformed.
Yeah, it really sticks out, doesn't it? That's an index that gives you exposure to just the sub 5 billion market cap segment of the Nasdaq Biotech Index. So you could see Nasdaq Biotech there lost just over 1% versus Junior Biotech up 8.9. That's a 10% differential. That is a huge, huge swing to have within an industry, just the small cap versus the overall. And part of that, I think, is due to just junior biotech being one of the more speculative parts of the market. It's just been absolutely hammered over the past year and a half or so. So that was kind of due for a bit of a corrective bounce upward. And there's been some encouraging M&A activity as valuations in that sector and kind of some of the other sectors within health tech have also attracted some rebound in terms of M&A. And a lot of the smaller firms getting picked up by the larger names kind of on a shopping list, essentially, right? The other names on this list that stick out to me, cybersecurity, we've got 3 indexes there highlighted, up anywhere from 1 to about 3.5% for the month. Really illustrates to you, I think, the unique nature of cyber as not just thematic tech, but a kind of a defensive play within thematic tech. You think of thematic tech and you usually think of high growth and not necessarily defensive plays, but cyber, given how entrenched it's become in sort of the hierarchy of needs for enterprises, for governments, for even individuals. That's not an area that you would expect to get cut very quickly, even in a recession. When there's pressure to kind of cut costs, it's a must-have for companies and governments and individuals. So not surprised to see that being one of the few areas of outperformance here.
All right, Mark, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.